Welcome back, class. Hopefully that you're well and healthy and your family's healthy as well. Um, I'm just going to kind of jump into it. We're in week 3 now. This is part 1 where I kind of do a video and submit a Google form to you at the very end where you can try out some problems or maybe get a worksheet. Um, Today's learning opportunity are going to be based on small purchase loans, simple interest loans. That's what they're called by banks. It could be anything from like a car loan. It could be a small purchase, maybe a computer or some appliances around your house. Maybe you need to get some groceries. Sometimes they're called micro loans. Um, it's something that you'd have to apply at the bank for. They have small interest rates depending on what your credit score is. But I thought it would be kind of a good idea since you guys are kind of getting to that age where you're going to be starting to purchase items. This would be something that you might be interested in. We get you an item instantly. I always recommend just saving money if you can. That way you don't have to pay extra money. That's called interest to a bank to get that object today. Now maybe you actually require it now, so that does make sense. So you'd have to take out a loan. It does take a few days because you do have to apply at a bank. You have to have reputable credit with them so that they approve your loan and it's not out of your price range, and it does depend on whether you have a job or not, and what you can put as collateral, because you will have to have a cosigner, have somebody to sign off in case you know um, you're unable to pay. So let's kind of jump in here. I have the formula kind of written out in front of you. The formula here has a principal. The principal is the amount that you're borrowing. That's the P in this formula that you're seeing in front of you. Interest rate is the R. That's the interest rates based on your credit score. Good interest rates are below 5%. Bad ones are pretty much over anything over 5. I wouldn't probably take a loan for that. Time is the amount of years. It's usually in years. And then total paid is something that we're going to be finding on almost every problem. So this formula gives you the interest you're paying the bank. It's not the total you're paying. It's just the extra money that you have to give the bank to take out that loan today. And this is something you'd pay over the lifetime of your loan, unless you paid it off early. But they're based on simple interest. It's very different than a credit card. Very different than a medical loan or a student loan or a mortgage. These are just small purchases, what we consider small purchases compared to like a mortgage on a home. All right, so let's jump right in here. I got about 4 problems picked out. The first problem here, we're going to be purchasing a new stove top. Maybe you need to buy an oven for your house, and you're getting a simple interest loan on this. You're going to take out the loan for 5 years because maybe that's what you want to do for payments. You want to get them as low as possible, and you're getting a 4.2 interest, so that's not too bad. Preferably a little bit lower, but that's fine. The formula that we had earlier, this is kind of the formula. You take your principal times your rate times time. So my principal I'm taking is a $799 item. I'm going to take it times my interest rate. My interest rate is 0.042. You have to move the decimal over 2 spots. You have to move this over 2 spots, so it's 0.042. It's always 2 spots. It's just the rule for percents. And then we have to take it times the years. Well, we're borrowing this for 5 years. The less years, the better, but maybe you need to get that payment down as low as possible. Because when you take out a loan for 5 years, you can pay it back over 5 years. So that makes the payments significantly lower, but you're paying more money back in the long run, so it's always a bad idea. But 799 times 0.042 times 5 years, you're going to be paying the bank an extra $167.79 for the stovetop. This is the extra cash that you're paying to take out that loan today. So maybe you get it delivered today and you get that oven in your house so you can actually start cooking. So the idea is that your total that you're going to pay, the total paid to the bank for this simple loan that it's $799 stove, you have to add in the extra cash that you're paying the bank over 5 years. So if you were to pay this off over 5 years and never miss a payment, never get a late fee or anything like that, you'd pay a total of $966.79 for this loan. Monthly payments, you'd obviously divide by 5 years and divide by 12 months, and that would divide by 12, divide by 5. So you'd actually make a $16 payment every month. It's not too bad. But again, the interest rate, lower the better, and the number of years lower the better. So if you could just save up, you wouldn't have to pay the extra. You just pay the exact $7.99. But some people need it. You need to cook. So let's move on to our next problem. So this is our second problem out of the 4 problems here. we're looking at purchasing a camera, maybe not a necessity unless you're in the profession of photography. So we're taking a very expensive camera out for 6 years now. It's probably the highest, simplest loan that you could probably take is 6 years. I've never really heard of anything around here that you can take out a loan more than that. So keep that in mind. There is a limit to how many years you can take out that loan. They would probably strongly recommend that you don't take out loans for 6 years. The reason why is you'd be paying more money back in the long run for the item that you're purchasing. And second of all, if let's say you were to accidentally break the camera, you still owe money left on it, and it may be not working, and you can't do anything with it. You can't file insurance on it because it's not worth maybe what you still owe on it. So that's the danger of taking out loans for long periods of time. Less years, the better. Now this one has a really good interest rate though, 2%. So maybe that's what encouraged you to purchase this very, very expensive camera. So maybe this is a high-end, professional grade, DLSR, or maybe it's a video camera of some type. But we're taking out the loans, so the principal times my rate times time. So the principal we're taking is a $2,275 camera times 2%. So this is 2%. We have to move that decimal over 2 spots. So it's 0.02. And then we take it times 6 years. So $2,275 times 0.02 times 6 years. You're paying an extra $273. This is the extra money. That's the I. That's what it stands for. The I is the extra cash for interest that you're paying. So your total that you're going to pay for this camera over 6 years is $2,275, and then you're going to add the 273 on. So again, 2,275 plus the 273. You should be getting 2,548. So $2,548 for that camera. To get it today, right now, you can go purchase it. You don't have to wait. Maybe your job depends on it. So there you go. Now, if you want to know what the monthly payments on something like that for 6 years, divide by 12 and divide by 6 years. So $35 a month for that camera. Maybe that's worth it. Maybe you can make that type of payment. Maybe you just think about it in that terms, where it's only $35 a month. Let's go to our next one. So this is second to last problem here. We're buying a washing machine, something I experienced this year already. So purchasing a washing machine is $1,750. This must be, maybe it's maybe it's the washer dryer as well. We're taking out the loan for 3 years and 22% interest. Terrible interest. Don't take that interest. But 22%, that's what this particular loan is going to be for. So maybe you have really bad credit. But again, here's your formula that we have. Same exact work. The principal I'm borrowing is $1,750. My rate is 22%, so it's 0.22 because you have to move the decimal over 2 spots. That's how it always works. And then you're going to take it times how many years. Now, luckily, you're only going for 3 years, but the thing that's going to kill us on this one is 22%. So you're going to see this. $1,750 times 0.22 times 3. You're paying an extra $1,155. That's the extra cash you're paying for this washing machine today. That's nearly doubling the price of your washing machine. Don't take that loan. It's silly. So $1,750. Again, we're finding the total here. You're going to take the $1,750, the original cost, and you're going to add in the extra cash that they're making you purchase. So again, what is this? $2,905 for this purchase. It's not smart. Most banks would not loan you that. They would see 22% and they would just instantly deny you the loan. They wouldn't even allow you to make that terrible purchase. This might be something that I know you need a washing machine, but it might be just something that you just need to go to the laundromat for a few more months and save up money or find an extra job, because I would not pay double for the price of a washing machine, especially 22% interest. That's silly. All right, moving on to our last problem here. I didn't do the monthly payment on that one, sorry. But moving on to our last one, we're going to purchase a car. Maybe this is something that's realistic for you guys right now. So the formula here is principal times rate times time. All right, so the principal you're borrowing is a $5,300 vehicle. We're going to go for 24% interest. Again, terrible interest. This is silly. Don't do that. And then you're going for 2 years. So at least you got the years down, but terrible interest rate. So $5,300 times 0.24 times 2. We get $2,544. This is the extra cash, mind you, that the bank is charging you to take out this loan today. So your total you're going to pay for this vehicle is $5,300 for the vehicle plus the extra cash that the bank is charging you to take out this loan. So if you add this in, what is it, 7,844? So $7,844. Now again, if you want to figure out how much you pay per month, per year, you divide by 12, divide by 2 in this case because you're running for a 2-year loan, and that'll tell you what your monthly payments are. Hopefully this made sense. I try to give you stuff that's practical that you can use every day. If you haven't, checked out your emails lately, you probably should do that. See the previous Google forms that I've submitted out to you, that you can try out some different activities. But again, I'm hoping that you're staying healthy, you're well, and your family is healthy as well. But take care, and I hope to see you soon.